Bitcoin is very bearish and we're currently at 91,500. Let me explain to you in this episode why we might be getting some bullish momentum pretty soon. Welcome back to FlexCandle, where we read the candles and flex the moves. Today, we're going to do a top-down analysis on Bitcoin, but before we get started, I just wanted to go over these two winning trades on the daily chart. They're two shorts. The first one was this head and shoulder pattern taking us down. I have here the measured move to about 91K. I also have this bear flag here taking us down to about 91K. As you can see, we pretty much hit both measured moves, so congratulations to whoever took these trades. These are big wins for the FlexCandle community. All right, guys, so it's currently 3 p.m. Eastern time. The price of Bitcoin right now is at 91,470, and we've dropped a lot. Starting off here with the weekly chart, we have 6 days and 4 hours before this new candle closes. The stochastics are still on the way down. They're rolling over. If we zoom in, we can see that there's no curve yet, just going really low. Maybe we'll get a turnover this week. So far, if you see here the dotted line, this is pretty much the bottom of it, and usually from there we go up. We're basically almost at zero on the stochastics RSI. Now, we did close this red candle below the 50 moving average. If you guys saw yesterday's episode, I explained how I believe yesterday was the first day of the bear market. Now, I wouldn't be surprised if all of a sudden we get a tweezer bottom, we get a green engulfing candle, we close back above the 50 moving average. Then there I might have to rethink it. But if we definitely get another confirmation candle, which would be another candle close underneath this 50 moving average, or possibly two more, I would have to say we are definitely in the bear market. So far throughout history, if you saw yesterday's episode, you would see that anytime we closed a candle under the 50 moving average, we did enter the bear market. So I feel like 90% certainty, for me at least, that we might be in the bear market at the moment. Now, this looks like it's heading towards the 80 moving average. That's currently at 89,924. Now, something I want to show you guys is I have this in a rising wedge. Now, rising wedges are usually bearish, so it would make sense that it's breaking down. But when there's a lot of bullish momentum, if we break out of a rising wedge, it usually breaks out parabolically, and this is why I thought that possibly we could have made it up to about 155 around there. But now that this already did break down, unless we could get back into the pattern, this actually would make this a bearish pattern. And look at this, it's taking you basically below the 100 moving average, and the measure move to this takes you to about 78K. The 100 moving average right now is at around 83,277, so it looks like we could be headed towards 83, 78K around there with this breakdown of the rising wedge. I just wanted to put that out there for you guys, because technically this is a bearish pattern. I just had it bullish because we had a lot of bullish momentum, but I think that the bear market might be here. Let's see what ends up happening. I hope I'm wrong, and I hope we continue in the bull market. It will be better for me that way, but we got to go with what the charts tells us, not with how we feel. Now, if we go to the other time frames, the 6th day, you can see we're still on the way down. The 4th day, we're still on the way down on the stochastics. The 3 day, we still have no sign of rolling back up. This looks like it definitely wants to hit this 200 moving average. That's at 87K. That seems pretty close to what I'm telling you is happening on the weekly with the new measured move to the downside. Now, on the 2-day chart, look, we rolled over as well. We lost the 200 moving average. This is bearish. On the daily chart, you guys already saw in the beginning the head and shoulder pattern and the bear flag played out pretty much. Now, something that I'm seeing here is we are having a death cross. That's when this red line, the 50 moving average, crosses the 200 moving average, this yellow line. Usually this gives us a breakdown, which is what's happening now. Now, during bullish times, when you have a death cross, that usually marks the local bottom, and usually we start going up from there. But as you can see, I could give you an example here. The last time we got a death cross was all the way over here, somewhere around April. This is when we fell down to 74K. You see that the red line crossed the yellow line, we fell down, but since we were bullish, we ended up coming back up. So usually we do come up from there. So this is a possibility that shows that maybe we might have some bullish momentum. The only problem is, if you guys go back in the chart, whenever the bear market starts, if you get a death cross, you actually keep going down. So if I am right and this is the beginning of the bear market, whether it's a short bear market or a long one, since we lost a 50 moving average on the weekly, this death cross might mean we get more downside. But I think that temporarily we might get some type of move up. Maybe we still go down a little bit lower, but the reason I'm saying that is because we are far away from the 21 moving average. That's currently at 103,416. So we're either going to go a little bit sideways and wait for this 21 moving average to catch up to price before we keep on going down, or we're going to have to pump up to the 21 moving average. So that's why I think that short term we might have some bullish activity. That doesn't mean that overall we're not bearish. Now, if I flip the chart upside down, bottom. Remember, whenever I tell you guys there's a flag, but we're too far from the 21 moving average, I always tell you we got to wait for the 21 moving average to catch up to price, or we got to come down to the 21 moving average. So if we come down towards it, we basically would have to get close to 100K again, 103K. I don't know if we would make it there, but the chances are that that is going to happen unless we're just going to go sideways and wait for this 21 moving average. So this is the hope that we have. This def cross possibly means this could be somewhere along the lines of the local bottom and we're going to go up. And also the fact that we're far away from the 21 moving average would mean that possibly we could at least make it up close to the 21 moving average before falling down. Some type of relief rally maybe gives a chance for certain people to get out if they want to. So that's the hope that we have at the moment. Let's see if that does play out. Now, the other time frames, the 22-hour, look at this. We didn't even get above this dotted line. We're already rolling over. This just shows that we're going to get more downside. This is why I feel like we are going to go below 90K possibly. The 12-hour time frame, we're rolling over. 8-hour doesn't look like we're on the way up. The 4-hour looks really bad. Look, we double topped on the stochastics. We're still on the way down. We just got rejected off the 21 moving average. So since we rejected it, that means we're probably going to go a lot lower. On the 1-hour time frame, we still have more time before we could reset there. And on the 15-minute time frame, as you can see, we're weak. We never could make it above this 200 moving average. Once we wicked off here, we just fell below. We couldn't maintain the 200. We couldn't maintain the 21, and we're still going down. So right now, guys, I feel like this could be the next play on the weekly. If we cannot make it back above that 50 moving average, it would be this rising wedge that would be breaking us down pretty much anywhere between, I would say, 83K to about 78, 77K. So if there is more downside and there's no relief rally, I would start expecting those numbers. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is FlexCandle, where we read the candles and flex the moves. Catch you on the next chart.